Comments made on the following paid commercial program are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time.
Welcome to the Money and Wealth Show. On the program this week, tax tips with David Ingram, money commercials, and our special guest, David Morgan. Welcome to the Money and Wealth Show. I'm Sterling Fox. We're on location in downtown Vancouver, right in the heart of the business district. And it's a pleasure to welcome back the editor and author of The Morgan Report, David Morgan. Good to have you back with us, David. Thank you for joining us. Great to see you again.
Ster, it's always a pleasure.
And we have caught you at the World Resource Investment Conference, where you're a featured speaker. And before we get to the nuts and bolts of what you're telling investors, tell us how investors are feeling these days. What's the buzz in the room these days with investors?
You know, if I have to pick one word to talk about how this conference is going, I'd call it a bit sluggish. It seemed like there wasn't a lot of energy. I would say it was down as far as attendance, but the mood was kind of low. You know, sluggish, I think is the best word. It wasn't that they weren't interested in it. I think they're as interested as ever. But the stocks have been sluggish. So I think that the mood of the investors reflects the mood of the market. And let's face it, gold has done quite well here for the best part of this year. Silver actually on the year has done pretty well. But the underlying equities in the resource sector have really been sluggish. And these people, I think, are long-term investors that are kind of tired of the fact that a lot of these stocks really aren't performing. Mm-hmm. But you know what? I think that we don't have much longer to wait.
What resource sectors are investors most hopeful about? If it's sluggish and they're feeling a little less than frisky about investing, where are they looking, though, David, that shows a little bit of promise?
Well, I'll do it from a top-down analytical perspective, which is the way I look at the markets anyway. Gold is still the king, and I think everybody there is interested in gold. But if you want to go into the subsets, I'd say that the rare earth element sector is probably one that's got a lot of interest, more buzz and probably more enthusiasm than any other subsets. Uranium has been kind of dead for a while. You don't hear much. People that are invested in it, of course, are looking at the companies they've invested in, asking all kinds of questions. Silver is, got a lot of interest, but not as much as gold. And then the base metals are pretty flat. I mean, you don't see a lot of people running around wondering, what the copper prices are going to be over the next, year or two.
Okay.
So, there's an old adage in the market, Sterling, and you've probably heard it many times, but it's never sell a quiet market. So since we have kind of a quiet, sluggish conference, we might take that into account that maybe, things might be different this time.
But when we have this sort of dip, this kind of lull, people see opportunities in moments like these where a lot of people are quite content to just wait. No, it's not my time. It's not time to play right now. Others are just waiting to pounce. Where are they looking?
I think they're looking for value, and there's a lot of value to be had. In fact, the whole sector is pretty much undervalued. Of course, there's exceptions, but almost everything. In fact, I'm going to be doing an upcoming interview here shortly, and it's a company that has a PE of about 1, and it's probably conservatively 50% undervalued to its net asset value, and that's the kind of deals you ought to be looking at. So, if you know what to do, if you do your homework and you pay attention and you're somewhat patient, you almost can, not make money. The problem we have is, investor psychology. People usually don't do what is the right thing, meaning when things are quiet and things are undervalued, that's when you want to come in. They want to follow the herd rather than lead the herd. I've been a leader most of my life. I like to do things when most people aren't doing them. Right now, I think you got to start looking for value and scoop up some bargains.
So would you acknowledge then that there are opportunities right now in the marketplace if you do good homework and seek them out?
There are in the resource sector, and probably all sectors. I can't know them all, but there's always opportunities, and that's what people need to get pounded in their head, because they're always cautious or whatever. And again, they're followers for the most part. But if you can do your homework or know who to read or what to study, there are opportunities almost daily when you get down to it. Now, I certainly don't have the ability to look at that, but I do study the resource sector very hard, and there are opportunities without a doubt right now.
Now, you talked about the herd mentality, and I'm glad you did, because there's an adage in the investment business that suggests by the time the herd catches on to a stock or a sector, it's already past its prime in terms of maximum earning potential. Do you agree?
Pretty much I do. I mean, if you look at any market, resource market, tech sector, real estate market, what happens at the end of the market is you get the euphoric or mania stage. And this is where all the Johnny-come-latelys are going to come in and make a fortune. Well, what they're doing is pushing it to heights that are unreasonable and unsustainable. And the herd follows them in, as you said, and you get to a price level that's a parabolic move usually if you're a technical type. And you understand that that can't last forever, and then it comes crashing down. And no market is different from any other from that aspect, because it's psychology. It's not the asset class, it's the psychology behind it.
Absolutely, and it is just so darn tempting, David, and you've been there, I'm sure, and certainly counseled people who have been there many, many times. It's tempting to hang on to that hot stock or that hot sector of activity that everyone else is just coming around to. They are driving the price up, and you don't want to let go because it may get to unheard of heights, and you will become rich overnight. And inevitably, people tend to hang on to them too darn long, don't they?
Exactly, and they don't understand how markets move. You know, people that are amateurs want to get out the top tick or in at the bottom tick, and what they don't understand is once you buy one share at the bottom, it starts to move up. If you buy 10 shares, it moves up further. Same thing at the top of the market. When there's a top and there aren't anybody there to buy, one sale will start taking it down. A big sale will take it down further, and then you can even get a gap in the market. And this is what happens. So you really want to sell into strength, and you actually want to buy after bottom is formed. And it takes discipline, because most people, again, have kind of an amateur mentality. They want to get that last nickel out of a stock or a commodity trade. Don't. I'm very good at leaving a little bit of room for the next guy to go ahead and try that. I've tried that. I learned the hard way. Don't do it.
You're watching the Money and Wealth Show. Our special guest this week, precious metals analyst David Morgan. And we'll talk gold and silver and lots more after this break.
My name is David Wolfen. I'm the president of Avino Silver and Gold Mines. Avino owns 100% of the historic Avino mine in Durango, Mexico. Mining dates back over 500 years, and under our control, we mined it for 27 years. We're starting on a new era of mining, and we plan to reopen the mine this year. Avino trades on the Toronto Venture Exchange under the symbol ASM. For more information, call 604-682-3701 or visit the company's website, www.avino.com.
Good afternoon. My name is Larry Ray. I'm the president and CEO of American Manganese, Inc. I'm here to tell you today that American Manganese could possibly bring in the lowest cost electrolytic manganese metal mine in North America. It'll be the first one in the past few decades. What is manganese? Well, you can't have a steel industry without manganese. If you don't have manganese, you don't have steel. If you don't have steel, the world stops. North America has no manganese. We depend on our neighbors and other countries to import our manganese, and it just doesn't make any sense we don't exploit the resources in our own country. So I'm here to tell you that we are moving ahead with the feasibility study, we're moving ahead with the environmental studies, and we're moving ahead with a massive drill program in order to build the American Manganese, Inc. into the first primary electrolytic manganese producer in the United States. Please visit our website at americanmanganeseinc.com or call us at 604-531-9639. Thank you.